got a couple voicemails I want to get through. Just give it 2 seconds. I'll see, maybe a couple more people show up. Not to say I don't appreciate the 3 of you, or the 2 of you, whatever it is, because one of them is me. What's up? Cheers to you too, bud. Cheers to you, cheers to you. Let's see. Just working on a couple things. Boppity, boppity, boopity. I just made somebody leave. Dope. Awesome. I put my headphones in. What's up, Robin? How are you tonight? Robin started us off. First voicemail of the night. I know I've listened to it, but I forgot what it was already. So we'll all be hearing it again for the first time together. Let me just make sure everything's good here. Make sure. Yeah, no, I forgot to mute that. I'm just going to go to the main camera now. Let's go, let's go, let's go. All right. Should be pretty good now. How's that audio? Much better, I hope. Maybe, maybe not. Let's see. A couple things I just want to mess around with quickly. I want to make this a little bit more. Yeah. All right, I think that's going to be better. Okay. What's up? What's up? Halloween. If you're like me, this is like the 10th day of Halloween. I fucking hate holidays so much. I'm such a Scrooge. I fucking hate holidays. Such an inconvenience. If you're like me and you're like OCD scheduled and like you need everything to be like perfectly perfect and you like routine and you like that, holidays are the worst. I hate them. I hate them. Especially when you have a kid with a lot of food allergies. What's this? Can I eat this? Can I eat? Nope, that's going to make you die. Nope, that one will just make you throw up. That one might just give you some diarrhea. Don't really know quite yet. Ooh, that one? I've never actually heard of that before. Yeah, today's the actual day of Halloween. There'd be no way of knowing that. Right? If you're like homeless on the street, you're like, wait, what? Halloween's today? I thought it was last week. What's up, JD.JRW. Oh, no dot there. If you guys got any questions for those of you that are joining us in here, if you have any questions, please feel free to leave them. I will be making sure I get to all those. Let me see how many voicemails I have. 1, 2, 3, 4, 5, 6. I got 6 voicemails to do tonight. I don't know if they're all like big ones, small ones. I've only listened to about half of them. For anybody else, if you have like questions on the dividend portfolio video I posted this week, there's definitely going to be a fair evaluation video that I talked about that I said I wanted to do. I kind of knew people would be into that. It's just going to be like a boring video. It's going to be one of those where I have to like drag myself to make it. But no, I'm going to be making that video this week. Pretty excited about that. I'm also going to be putting a bunch of money into the dividend portfolio. I'm going to keep doing that. So that's going to be like my main priority now for at least a little bit. I made my leaps option last week with waste management. I'm not really into leaps right now. I just don't have a lot of faith in the markets as far as long term. Not to say that like I think there's going to be a crash or a bubble. I just if my gut says I don't know, then I'm just going to stick with I don't know. And if I can hedge around it. Sorry, I just got an interesting text. From my wife. What's up, Amra? We'll be getting into your private Discord tomorrow. I've been waiting until the first. Good idea. Thank you. Awesome. Yeah, no, there's definitely a lot of maintenance. I mean, I can definitely bring up the Robinhood portfolio. We could take a look at that quick. Let me just do that. There's I mean, everyone's talking about the Fed meeting and things like that. I can't say that I really even care about that too much. That's not something that I'm really too concerned or worried about. Hold on. Sorry, I'm reading the chat, getting this up. So here's the Robinhood, 32,618. Bad day. Last week was a little bit red, nothing crazy, kind of flat actually. The last month is up 4%. I'll take that. We got some Foot Locker puts that are going to be expiring this week. That's really all that's this week. The Lucid put that I bought, me and Aaron Azevedo are going back and forth, and we just do not get the electric car craze. It's almost as frustrating as crypto. It's not as frustrating as crypto, but it's pretty annoying. And when Lucid announced that they were actually going to fulfill orders and release some cars, the stock jumped to 15-20%. It was hold on a second, let me see this thing. This was last week. Look, this is stupid. For the last 3 months, it's been trading right here, okay? And then, boom. This is all in a day because they said that they were going to release some cars. I'm like, F that. Look at this. Cool, man. You released a car? To me, there was no reason to think that after everyone's like, oh, wait, that's not really that big of a deal, it's going to go right back down to 24. So I just wrote, I had to buy a put on it. I just don't understand the craze. I don't know. Smith & Wesson, got 2 weeks for that. My VTI call, not really looking great, but that's fine. This was well above my basis. Actually, I don't think it was well above. I probably sold it right at the money. This was at a basis of 226. So right now I have it at 226. If I get called on this at 235, that's a pretty good gainer right there. I'll take that. So right now, that's a wheel stock, so I don't care too much about this. Here's the poor man's covered call on this waste management that I made. So that's 2023. Vuzi, we're just straight chilling. I haven't wrote any calls against that in a while. HPQ has been a little bit crazy. I'm actually down on my HPQ. I had to roll at a loss, and then this week wasn't any better. It was slightly better, but I cut my losses a little bit on that. Starbucks, we know Starbucks had a crazy week, so there was no calls being written on Starbucks. Starbucks pretty much had a down week. Let's say 1 week. Yeah, this was not good news for them. Okay, they did not. This is what you call not a good earnings call. But like I said, that's why, but nothing changes for me fundamentally over the course of time. And I don't think that anything's really going to happen. So good thing I have until June 2022 to really make this happen. It's not that big of a deal. Tattoo Chef is just kind of just chilling. I don't have any calls written against that. Carnival Cruise Line, this put, I'm kind of just watching that put, and the good old Vuzi put. So these are all next year stuff. So this week, what I'll be looking to do, Intel, right after I bought Intel, it took a shot. So I'm right now at an average cost of $52 on Intel. If it keeps bouncing back after this debacle right here, so I bought it way up here. Actually, I bought it, let's say. Yeah, I bought it right here. So then it was oh, cool, Intel, see you later. So I haven't been able to write a call against that wheel. Intel's just going to be a wheel stock for me. So once that gets up and I could start writing above my basis, I'll be pretty good. I'll be looking at that. The rest of my watch list, some of these are wheels, some of these are leaps. Peloton is probably going to be more of a leaps. Uber would be more of a wheel. Coca-Cola, I kind of just watch it. Same thing with Robinhood. I kind of just watch it for fun, just to see what's going on with it. Ford, I was thinking about wheeling Ford, but the premiums are just laughable. And then everything else is pretty much stuff that I have. Cisco down here, that would be a wheel. Visa is I just watch Visa as well. I like to see when Nancy Pelosi's winning and losing money. That's a joke. Well, it's not a joke, but I have to say it's a joke or the left will yell at me. All right, let me see what else we got here. Honest Life, I'm with you. I think if I didn't have a Leaps open on Starbucks, I'd probably be placing Leaps this week on them. Like I said, there's a difference between like the market perception. I don't really see that big of a deal. Like, great, like they have better, like it happens. Like, what the hell would you expect? We're still dealing with this worldwide whatever. Nobody knows what's going on. Nobody knows who to trust. Like, conspiracy theories all over the place. A company like Starbucks, they feel the backlash of everything. But I know everyone's all about bros, but they're not taking over Starbucks anytime soon. So I feel like they kind of have a pretty nice moat on the market. Marco down. I just put 5,000 SC HD. Everyone loves that. And VTI. Maybe. We shall see. Steven, I do all my options primarily through Robinhood, so I don't get charged. I also have a Fidelity account, so I think they're like 63 cents to open, and I don't think they charge to close if you do it in a certain time frame. I got to look. I'm kind of like new to Fidelity. I've only been trading options on there for like a month, and I know that like 60%, 16 cents, I don't really care. The hedging topic sounds like a good video. What do you mean by that? What did I just say that made you ask that? I'm sorry. I think instead of 2 years, take profits. Yep, that's what I do. Thank you, Greg. Yeah, smash that like, please. It's different for me when you guys can't ping discussions back and forth. Wait, it's different for me when it's just you for voicemails and you guys can't ping discussions back and forth. No idea what you're talking about, bud. Lucid sold mine early. I'm sad. Whatever. to be honest. I just don't understand. I don't understand the electric car like craze. I don't get it. I just don't get it. Shouldn't they be expected to? Yes, Robin, they should. They should. Yeah, I don't know. Nancy doesn't take losses. Yeah, the bros plug in. Everyone's like, bros. What's up, Colorado? How are we doing, bud? We're in Colorado, big state. How much total do you have? How much total? I'm sorry, I got to read slow. I've been drinking all day. How much total do you have over all your accounts? Right, Robinhood, everything. And what amount do you think? What? How much total do you have over all your account? Right, Robinhood, everything. Am I drunk? I'm sorry. Can you rephrase that? How much total do you have over all your account? Right, Robinhood, everything. Robinhood, 32,618. What amount do you think you can retire on? I can retire today if I needed to. My retirement is 25 times my yearly expenses. Retirement's an amount of money, not an age. So I considered myself financially independent when I had 25 times my yearly expenses invested. And I think I'm actually closer to 30 at this point. Oh, he wants to know how much I have total invested over everything. I have a fair amount. I'm not really much of a net worth guy. I don't really like to discuss my net worth too much. I do have a lot of my portfolios that are public, so I guess you could do the math, but it's enough, like I said, that I can cover 25 times my yearly expenses. I'll tell you this, if you want to do some math, right now, like Robinhood and my dividend portfolio is less than 10% of my total invested net worth. So, I don't know. It's just out of privacy for my wife and things like that, and so I could sleep better. I don't really talk that much about net worth, but like I said, I show them, but I don't necessarily do that. Do we have any rentals? JJ and I are going to be talking about the rental game, the 2 duplexes, the 4 doors that we're in contract with and things like that. Check out the Average Money podcast. We'll be talking about the rentals. I don't really know how I'm feeling about real estate, to be honest. And I've talked about this on the podcast before, so I'll reiterate it just briefly. I feel like real estate is like a young man's game, and that you get in real estate for like the long potential growth and like what it can do for you. And I feel sometimes torn that the only reason I really love real estate is because I feel like I need to, because it's like that's what people talk about and people do. But then like when the cameras are off and the lights are shut down and I'm just sitting there, I'm like, I'm 40 years old. I'm financially independent. I can live off my investments. Like even the BS that JJ and I've been dealing with these rentals over the last month or so, I'm like, I take a little bit of a pay cut. Like I don't really need the money. I'd rather just like put 50, 100 grand into realty income and get a lower return, but have to worry about nothing. And there's an amazing YouTuber dividend portfolio guy, Gen X dividend investor out there. Shout out to that guy. And he used to own real estate and he just sold it off. He's like, I like working and doing nothing. I like money for doing absolutely nothing. And as passive as real estate sounds, it's still like you still got to think about it. So he got rid of it and he doesn't regret it. I don't know. And it's hard when your best bud is JJ Buckner and like he eats, sleeps, breathes real estate. It's all we talk about most of the time. And I feel like maybe I got like a little tricked into it. I don't know. Maybe if I get 10 doors and it's really doing well and we get a good system. But to be honest, I don't know. Maybe I'm just feeling too old for real estate to get started. I know you're never too old to start, but maybe not too old to start. I feel like maybe I'm getting a little bit too old to like get in. I don't know. Not that's get into it and starts the same thing. I'm trying to like come up with a good analogy of like, here's another example. Like, I don't think I would start another business, right? I've started 5 different businesses and sold most of them. I don't think at my age I would like start a business because I know what it takes to get a business going and get it to be successful and get it to a point where you can sell it. And I just don't want to put that time in right now. And that's kind of how I feel about real estate. I'll mention about hedging. Yeah, I actually did talk about that a little bit in my dividend video about why I was getting back into dividends and why I'm dumping so much money into dividends. Dumping so much money into dividends because I feel like it is a good hedge. If the market goes sideways, I win. If it goes up, I win. If it goes down, I'm probably still going to win with the quality stocks that I picked. So that's kind of like my hedge. And if it goes right, I don't know. We'll see. But I mean, all of that being said, like I said, 90%, 85 to 90% of my invested net worth is in VTI and VOO. So when I show $32,000, leaps and options portfolio, that's for sport. When I show a $50,000 dividend portfolio, that's a hedge. And like, that's why I hate talking numbers, because then it makes it sound like, oh, must be nice. But, because people don't want to think about Brad Finn, Baby Steps Brad 4 years ago when I had $189,000 worth of debt. They just want to think like, what was this asshole flexing his money around the internet? But you have to understand like the complete picture. And the complete picture is that percentage-wise of everything, the dividends and the leaps options and things like that is a very, very, very small percentage. Nice, 403B. Gen X is a great channel. He is. And his Discord's amazing too. C-Night tax liens are, I looked at them so much in New York State. They're the hold time and the eviction time. It's just unbelievable. I would definitely think about doing that in other states. And if that's something that you're into and you want to like reach out to me and we can put some good paperwork, I would love to like invest in that particular part of real estate. I like that. I like those things. Like, and thanks for saying I'm not old. It's not that I'm old. I'm just too old to start. I would rather lend hard money. I would rather do tax liens. I'd almost even rather do Airbnbs, do short-term rentals than like, I don't know, tenants and leases and getting them out and vacancies. I don't know. I change every day though, right? I change out every day. Cash out refis are tax-free. Yes, they are. It's so easy to get caught up in it. I mean, the FOMO is real on anything, Commercial real estate is a lot better than residential. Yes, I agree with you to a certain extent, because I don't have a lot of faith in brick and mortar like 10 years. I think you're going to have to be a really, really specific business to stay open. And maybe it's just where I live and maybe rent's high. But if I look in just my neighborhood at like even the small, like the shopping centers and like the free standalone buildings within a 5-mile radius of me, there's probably, with the exceptions of like 7-Elevens, there's probably a few that I can say have been around. I've been in this house since 1985. I don't think there's more than 5 businesses that have been around in even my town of like 2-mile radius for the last 10 years. I just don't have a lot of, faith in brick and mortar moving forward. I don't know. Charles, yeah, I'm definitely going to be dripping those in with that portfolio. But not like a traditional drip. In M1, it goes into your buying power. They don't drip directly into the stock. So in M1, it's just going to go in, and then every time you can set a certain amount. They call it, I think, in M1, like your rules. So for example, like my auto invest doesn't trigger until I have $250 in my buying power. So I'll collect dividends, and it won't reinvest them in my entire pie until I get to 250. And you could choose whatever rule you want. And then say I have like 100 in there and the market goes red for a day, I can go in and manually like put that in. But yeah, it doesn't drip directly back into the stock, which I kind of like. I really, really like that balanced portfolio. I used to spend so much. That's why I love M1 so much. I used to spend so much time like looking at where I was, like what am I over leveraged? What's the percentage of my portfolio? What's this, that, and the other thing? And what do I have to buy and what do I have to sell? The fact that M1 does that for me, it's awesome. I just set everything to 5%. And the beautiful thing too is it essentially is buying the dips for you. Like last week, Intel got crushed and so did Lockheed Martin. So like right now they're at like 4.2% and everything. Some things are at like 5.2, 5.1. So next time I drop money in there, it's going to buy those first. It's going to buy those dips first to equal out my whole portfolio. It's fucking awesome. Sorry for the F-bomb. It's my show. Why don't you diversify into crypto, Bitcoin? I own Bitcoin. I'm for Bitcoin. I'm very for Bitcoin. I'm not against crypto. I have a fair amount. And when I say fair amount, I think I got to take this off for a second. Sorry if my belly button shows. I want to say I have like 10 grand in Bitcoin. To be honest, I don't know. I might actually have more. What's it at? 60? I have more than 10K. I put in $2,500 when it was at like, I'd have to go back and look. When I first did my first I'm buying Bitcoin video, I put in $2,500. I want to say it was at like 11 or 12,000. I put in another $1,000 when it was like 18,000. So that's like 35. And then that's what actually, I said this in my Discord. I said, as much as I hate like this Shibu Inu and when Doge was going, it drives me bananas. But my Coinbase referrals go up just as fast as Shibu Inu do. So like I hadn't gotten a Coinbase referral, and I think it's like $10. If you don't have a Coinbase account and you're into crypto, it's free $10 of Bitcoin. So it's like you're not doing me any favors. You're only doing yourself a favor, and then I get some help. But when you fund your Coinbase with $100, you get $10 of Bitcoin, and I get $10 of Bitcoin. So I used to get like when Bitcoin was running up, I would get like one a day, so maybe like $70 to $100 a week. And then it went away, and then Dogecoin shot up, and I was getting like $10 a day again. And in the past 2 weeks with Shibu Inu, and it's not even traded on Coinbase, I don't think, I've probably got myself another $500 or $600 of Bitcoin. So I'm not against Bitcoin. I'm not. You got it, lover. I'll stop my shirt. You guys don't need to see a boiled chicken right now. I have a question. What? AI's I like, speaking of AI, I love how Zuckerberg like took credit for all of AI. And I mean, I guess it's VR, but he pretty much came out and was like, just to let you guys know that we created all of virtual reality. Everybody that's contributed to virtual reality last week was like, what the HMAs, here's how much you should invest in Bitcoin. You should put, and this is financial advice. Take that, YouTube. This is financial advice. You should invest enough to the point where you don't think about it. And I've said this, and that goes true for any investment. If you go to bed excited about it, it wasn't a good investment. If you go to bed worried about it, you're over leveraged. You should sleep like a baby on all of your investments. And that's the podcast episode that's coming out with JJ tomorrow. We talked about, when to sell. And I feel like I've always sold when I worried about it. Like the fact that I don't know how much Bitcoin I have is the perfect amount. Right? It's not careless. It's just that it's at a spot where I don't care. I know it's a speculative investment, so I don't need to look at it. I'm not over leveraged because at the time, $3,500, and I knew that I'm still above my basis. Like that's really all I need to know. Like if Bitcoin got down to like $3,000, I'd be like, I'm probably at a loss right now. But that's how much you should think about. Once you get to the point where you're like, do I own too much Bitcoin? You have too much Bitcoin. It's like the people on my Discord that screenshot like their profits of their leaps or something. They're like, should I sell to close? Yes. If you're asking, then yes. Simple as that. So it is on Coinbase, the Shiba. I think you could see it, but I don't think you can buy it. Yeah, I do got to step on my mean game. How much should I invest in beer? I invested a ton and got multiple X returns. But if you are going to buy beer, Boston Beer Company, for me, I think is the way to go. Right? Well, even the percentage, but it doesn't really matter that much. Like, if 2%, if I invested 2% of my net, if I invested 1% of my net worth into scratch-off tickets, that would piss me off. Like, that'd be too much. No risk, no reward. That's not true at all. You don't need to risk to reward. Hey, Diego, how are you, bud? All right, let's dive into this first voicemail tonight. I want to get to some voicemails. You guys can leave some questions, and I'll get back to it. I think the voicemails are somewhat short tonight, at least short answers. Like, I don't need to go too deep. But we got the first one coming in from Robin. Robin, I think you're in the chat.
Hey, Brad, it's Robin. So I have a question about how you choose stocks that you are thinking about buying. What is your criteria, and what are the differences that you look at between dividend stocks and non-dividend stocks? Thanks. Bye.
So, Robin, this came in before that dividend video. So I think I answered a bunch, but I'll reiterate for those people that didn't see it. First and foremost, companies that are in my everyday life. Public companies that I see in my house and I see everywhere I go is where I start. Then I make sure that I know how they make money, how they lose money, and who their competition is. The next thing I kind of look at is, does their revenue grow over time? Has their revenue grown? The next thing I look at is what's after revenue growth? Free cash flow. Free cash flow is really, really huge. And that goes into dividends, but with free cash flow, that's going to be how because earnings and stuff, right, that could be manipulated. Free cash flow is how they are going to pay dividends, how they're going to buy back shares, how they are going to acquire other companies. I want to make sure that at least their short-term debt to assets to debt is above 1. So I want there to be more assets than debt. Long-term debt, like I said, if the free cash flow is taking care of that debt in like 5 to 10 years, I'm really not too worried about it. If we think about payout ratio, which is for people that really don't know that much about free cash flow for the dividend stocks, I'm going to make sure that the free cash flow is like it's 60% or less. I know some people say 75. a good start for PE is like under 20, just to make sure that the valuation isn't absolutely ridiculous. And some people asked, they were following up on the dividend video, like, oh, so if it's above 30, you won't even look at it. Like, and I think I use the analogy, there's many strokes to a beautiful painting, and you can't just look at just one. Each one of those is their own set criteria and hold their own certain weight. But at the end of the day, and I'm going to go into that fair valuation. When I get to a fair valuation formulas and I start figuring out exactly what I think the price should be, that's for that video that's going to come out this week. And that is going to be a little bit more drawn out. But I think too many people focus on finding the next big one, right? I'm not for finding the next big one, and I'm not against IPOs. I just feel like there's many great opportunities out there that aren't IPOs. I don't need to get rich quick. I like to get rich slow. So the slower and more consistent I can be, and like I said, that's just my age. I'm not against IPOs, and I know some people are killing with Bros, right? The coffee company doing awesome. Just not for me, right? And that's okay. Like, you are allowed to be like, I'm not into IPOs. I know people are making millions in NFTs. I'm not into NFTs. I know a lot of people are investing in every crypto coin because they think one of them is going to go. Cool, man. I would rather be punished for omission instead of commission. I would rather clap on the sidelines while other people are becoming millionaires, taking risks that I frankly just am not ready to take. So I just start with the things around me. And I'm not really a big stock guy. I'm big into ETFs. I really am. And if you think you're a stock picker, sit down and play a little exercise with yourself. Write down what you think the top 10 holdings were in VOO 10 years ago. Okay? If you think that you have a good balance, write down what you think the top 10 stocks were in VOO 10 years ago. F it. You can even do 5. Do 5 years ago. Right? Then write down what you think the top 10 holdings in VOO are right now. Then try and predict what you think the top 10 stocks are going to be in VOO in 10 years. And all of that time that you spend doing that, if you're right, you spent more time than I'm going to spend by buying VTI or by buying VOO and knowing that I own all of them. Right? That's the beauty of index funds that people don't want to talk about at parties or at the water cooler, that are just not sexy. I know for a fact, 100%, no problems whatsoever, that in 20 years, I'm going to hold the top 10 holdings in VOO as 80 to 90% of my investment portfolio. So if you want to try and pick better ones, go for it, bro. There was an amazing tweet. I forgot who tweeted it today. Somebody tweeted, if you can invest in 5 cryptocurrencies that were not Ethereum or Bitcoin and you could not sell for 20 years, what would they be? Because the game changes, right? That forces people to be like, hey, and Marco, Whiteboard Finance, said this today on his Insta Live. He's like, as long as you know that it's completely a lotto ticket, you are 100% gambling. That's okay. I've put $1,000 on a roulette number, one number. I've done it. But I didn't get on Twitter being like, you guys should really play 28 black. 28 black to the moon. No, I was gambling. Thoughts on Leaps. Love them. Thoughts on Leaps. Love them. Love the freaking Leaps. Yeah, Dr. Horton. I mean, PE is a good indicator, at least a place to start, right? Because I know a ton of stocks that have really good PEs that I wouldn't buy, that I don't think are at a fair value. And I mean, let's take, for example, how PE can be manipulated, right? If you're just saying, we want a low PE, and this is something somebody was saying to me the other day, the lower the PE, the better, right? And I'm like, yeah, until it's negative, right? Which we see at IPOs. Let's bring up Bros again. What's Bros PE? Are they overvalued? We don't know. They haven't even had earnings yet. See on November 19th. Their PE ratio is non-existent. So we can't just go by one metric. We'll get screwed. Love 28 black. My brother's birthday was 28 and he passed away on 28. So whenever I went to the casinos, I played 28 black. Robin, you don't want to be rich. You want to be wealthy. Big difference. Compton, I've done I've done 20 videos on leaps. Go over to the main channel, check them out. In every single video, I talk about in detail what I like about leaps and how I pick them. I pick stocks that I think are going to be long, steady growers. That's it. That's pretty much that's the long and short of it. When I think a company is going to grow steadily over the next 2 years, that's where I'm going. Value or not, that's where I'm going. Because if they're overvalued and I still think they're going to grow, then what's that cliche phrase? Today's highs are 20 years lows. So with leaps, which is why I said in the beginning of this stream that I am getting away from leaps a little bit, because there's not too many companies right now that I have 100% confidence are going to be higher in 2 years. Simple. Corey, what's up, buddy? Trick-or-treating. This is something, oh God, it's so creepy. It's like when people knock on my door and I don't know who they are, I grab a pistol. Why one day of the year it's like, oh, you're going to knock on my door and you're a stranger and I got to give you something? Oh, gosh. I'm so glad I live on a dead end off a busy street. I don't get too many trick-or-treaters except for the people across the street. I know them. Compton, you don't watch my videos, do you? Talk about this all the time. 100%. 100% for the year. I don't know if that's still true. I'll click it quick. 88% currently. That's what my returns are. I also post my spreadsheets. Everything's there. Bah humbug. Yeah, guys, as we approach this holiday season, I'm about biggest Scrooge as they come. Biggest Scrooge as they come. For personal reasons. I hate forced social interactions. I hate the feeling of having to buy something for somebody to show how much I care about them. If you need to buy someone a Christmas gift, you treated them like shit for the whole year. Or most of the year. Right? I don't know. I hate putting on fancy clothes to see people I don't really like. Hate people drinking my booze. I just hate the holidays. You'll get there, bud. Credit spreads. Let's get on to the second voicemail. Let's do it. This was from the Edge Report. Plug, I don't know. Who's the Edge Report? I don't know. What do you got to say?
Hi, Brad. I have a small portfolio I'm trying to grow using options, and I had a question about rolling options. Isn't that just closing an option and opening a new one? It doesn't actually help your position. It just starts a new option. I've been struggling with this concept. I know that it may feel like you won, but I don't think mathematically you're in any better spot when it's done and over with. Could you clarify that for me? Thanks.
Actually, a really, really good question, and point taken. So, are you actually helping your position? The answer is yes, but it's a little bit of a weighted question. Or yes, but really no. You're right. When you roll, you're still screwed. When I have a leaps option, and let me bring this up. Let me see if I can bring this up quick. When I just want to see what my portfolio, my HPQ was. Because this is one that I just rolled very, very recently. History. Okay, let me just share this. That's actually a really good question. Because I'm still kind of screwed. I helped for a little bit. Rolling an option at a loss is a Band-Aid. It's a pinky in the wall of the dam. Okay? Now, sometimes somebody will get there to plug that hole and you could take your pinky out and you're good. Sometimes your pinky breaks off and you drown. Okay. It's a temporary fix. That's really, really what it is. So let's go back here. October 1st. When did I open this option? My HBQ, August 23rd. So I've been messing with this a little bit. Okay. Was it HBQ? It was HBQ. So we had you could see all these premiums down here. For the life of HBQ, it's been, and I'm sorry if this is like small. I don't even know how to make this bigger. Let me see if I can do this. Hold on. Bear with me. Let's see if I can make this a little bit bigger for you guys. Oh, that didn't help, you freaking stupid fin. Let me see. I'm trying to make it bigger for you guys. Two option order cancel. All right, does that make it a little bigger? But now I don't know what you can see. So the options for these things are so small, the premiums. $1, $2, $3, $23, blah, 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 blah. So you think you're all like fine and good, okay? 23. This one was at 5. Then I sold another 12. But look what happened here. I sold for 12, right? And then it went haywire. And it went all the way up to it went haywire, and I had to roll at 198. So that was a crappy day for me. Okay. I opened for $12. I put in my pocket, and I had to buy 2 close and roll at 98. So right there, I lost. But if we can see, because of what was happening with HBQ, all of the premiums, guys, we're talking like going from $3 to $10 into the hundreds. All right. So immediately when I bought to close this at 198, I was able to sell at the same strike, but I pushed expiration out a week and I collected 202. So I paid 198 to close. I opened for 192. I got myself $4, right? I netted $4 there, which made this entire operation up $16. Okay. So when you look at rolling as a one option like order, it could seem good or bad. Rolling is a part of a big picture. It's a part of a 3-4 year process. It's in terms of a leaps, it's a part of a 1 year leaps, right? It's all of these things kind of working together. And when I just did a video, the closing leaps, I talked about one leaps option that went really well, waste management. And the other one that I had to close, I think it was Pepsi, where I had to roll at a loss a lot, but at the end of the day, it worked out. So what happened with this HBQ call? What I really, really wanted is by 1029, I wanted everything to like shoot down. I wanted the values to go back to their $3-4 that I'm used to. It didn't. Okay. But it did go down a little bit. It went down to, I had to buy to close. This was on expiration day. I waited as long as I could. I had Theta help me out as much as I could. And I was able to close that. Hold on a second. So let me show you now what that looks like. Yes, I have a lot of emails. I apologize. Drive. Where are you? You're right here. Okay. So right now with that, HBQ, I'm minus $46. Let me get this back to like normal size. Sorry, I'm just going back to normal size. What you know about, every time somebody talks about rolling, I say, what you know about rolling down in the deep. Okay, so right now, here it is right here. I'm down $46 on that. Okay, so I don't know. So rolling, I could have been down if I would have started at 12 and I just would have closed at 198 or got that expired, I would have been down $100 and something. By rolling, I was able to stick my finger in the dam, and now I'm only down $46. And this thing doesn't expire for 447 days. So that's okay. I have 447 days to make up for this one rare thing that HBQ is going through, right? And get my money back. That's it. Not bad. So while we're here, here's all my wheels, guys. Wheels are doing okay. Not bad. So, what the hell was that? That was a big skeeter. So to answer your question, are you helping yourself? Yes. If you are looking at if you're looking at the big picture. You see me rolling, Hayden. If you can see the big picture. If you can't, and like you're getting flustered by rolling at a loss and that doesn't make you feel comfortable, number one, you shouldn't have been in that leaps because you knew that rolling was going to be a part of the process. And yeah, that's a good question. It doesn't really help you. Does it just make you feel better? Nah. Are you starting a new position? I think that's what he said. Like, aren't you just closing one position and starting a new one? Depending on what strategy you're rolling in, I don't think of that as closing a position and opening a position. My position, quote unquote, is the leaps. And everything that happens in the back with the spreads on top of that, those aren't their own separate positions. They're just pieces in the puzzle of the position of the leaps. Does that make sense? So I fully, just like, you know, when I say that when you do the wheel strategy, you should fully expect to get assigned. If you do the poor man's covered call, you should fully expect that eventually you are going to have to buy to close and roll at a loss. Thanks so much for the question. This next one comes from Callum.
Hi, Brad. Love the channel. Love what you're doing and keep it up. So the question that I had was actually about crypto interest accounts. So traditional savings accounts has a extremely low interest rate. So I wanted to know what your thoughts were on buying stable coins and putting them in crypto interest accounts to try and get a higher yield. Thanks.
If that fits into your investment journey, go for it. I'm not against that. I'm not against that if you do have pretty liquid cash in a regular savings account. Guys, do the math, okay? Unless you have a ton of money sitting in your bank account, okay? Do the math. What's like a bad interest rate now? Are they under half now? I don't even know what interest rates are on savings accounts. Like when I remember when Ally and everyone was fighting for like 2% interest. What is it now? You guys probably know better than me. But what I'm saying is, I remember when Capital One was like 2, and then Ally went up to like 2.25, and everyone's like, "I'm moving my money out of Capital One." I'm like, you're going to go through all that work for 0.25% over the course of a year on 10 grand? Like, it's not worth your time. So I would just do the math first to make sure it's worth the trouble. So as far as crypto, like they don't have BlockFi in New York. I know that's one of them that does this. I know JJ is a huge advocate for BlockFi and he uses that interest. I feel like you can get it in other places. And I don't really need the high interest. Here's an example. Like, if I want high interest safely, I'm going to invest in the market in VTI or VOO because to me, or even if you want to go even more stable, you can put it in bonds. But I feel like if VOO or a VTI goes for a crash, all those other cryptos and the high interest things are going to go too. So I'd rather just put it there after I have a liquid cash that I need to. The other thing that I'm really becoming in favor of is just, once again, investing that money, or at least putting in, look at M1 Finance. We talked about this. Do I need to collect interest at a 2%, 2.2%, 3%, whatever they're saying? Do I need to get 2% from a checking account inside or a savings account inside a crypto brokerage when M1 Finance will let me borrow 35% of my portfolio at 2%? So I can borrow that money, make 6% or more on it and only pay 2% and net 4%. That's better than a savings account. Also, too, if you really, really want to get 2% on your money, then get a 2% cashback credit card. like I said, I don't see the need to risk learning about crypto the hard way or the right way. I'm not saying it's bad. I'm not saying that it's going to go to the pooper and the crapper and everyone's an idiot. No. There are many people that are doing well in crypto, many people that are going to continue to do well in crypto. Would you say, oh, BlockFi is offering 9%? I mean, yeah. If you've done your research, I haven't done my research on it, but if you've done your research and you can get 9% on your money, okay, dope. I don't know how it's possible. I don't know what that fine print is. And like I said, maybe that's just me being uneducated. I'm being naive and ignorant. Like, that's why I'm not knocking it, because I really don't know. It'd be very easy for me to be like, no, dude, do not do that with BlockFi because of this. You're not going to get this. They say this. Read the. I don't know any. They're not in New York. They wanted to sponsor me. I got on a long call with the guy, and this was funny. We were on this call for 45 minutes, and I was like, yeah, I would love to work with you guys. It sounds awesome. And he's like, all right, man, let's just get you an account set up. He's like, what state are you located in? I'm like, you haven't figured out. And like, most people pin me for New York right away. He goes, oh man, I thought you had a New York accent, but I didn't want to say it. And I'm like, why? He goes, we just wasted both of our times. And I was like, what do you mean? He's like, we're not eligible to operate in New York. And I'm like thinking to myself, okay, I know there's a lot of insurance companies and things that can't operate in New York. What do you do that you're not allowed to operate in New York? So I don't know. I just feel like I can get money back in other ways. I feel like I can get them back in cash back. Like right now, the M1 Finance credit card's giving me 10% cash back on a couple things. And I could borrow money, and I'm not against it. Callum, that's actually a great question. Ask JJ, because he uses them, right? He's much more educated on it than me. Maybe I'll bring it up. We're going live on Wednesday in the Average Money Podcast on that YouTube channel, Average Money Podcast. So I'm going to leave a note because this is the desk I'm going to be sitting at. I'm going to bring that up. I'm going to bring that up in the live stream, and then because he'll be able to just better give you an idea of BlockFi, because he's been doing it for months now. I'm not opposed to it. I just don't, frankly, know anything about it. Anybody else in here use BlockFi? Give Callum, he's here, so you can definitely give him some education on that. Oh man, voicemails I have not listened to yet, but I see AA Ron. This has got to be Azevedo. Hold on.
Hey Brad, it's Ron. I have been thinking about ways that we can hedge our downside risk on some leaps, and seems to me that the best possible way to hedge downside risk on leaps, especially in a market correction, would be to do poor man's covered calls or buy leaps on stocks that are already undervalued. I'm just curious on what your thoughts are in this area. But other than that, have a good one, and see you in the Discord.
I got to be honest, I have to listen to that again because I was reading this. How much? I just saw C-Night post a question. I'm sorry for playing a voicemail before answering everyone's questions. So I didn't even listen to that. How much more could someone make playing the wheel versus packing their... Oh, man. Oh, you poking people. I'm going to be honest, and I've said this before. I'll say it again, and maybe one day I'll change my mind and somebody will call me a liar. Options premium from selling options is the world's greatest dividend. It's not as passive. It's taxed at a higher rate, but I made so much more money wheeling dividend stocks than I ever made from the dividends. So why dividends then, Brad? Because there becomes a point in time where I want to sit on my ass and not do anything. And I'll take a pay cut for it. Frankly, that's that. I heard a little bit. Let me just go back a little bit. Let's go here.
Way to hedge downside risk on leaps, especially in a market correction, would be to do poor man's covered calls or buy leaps on stocks that are already undervalued. I'm just curious on what your thoughts.
Okay. So him and I were like really diving deep into this world of value investing. Not because, once again, not because we think that the markets are going to crash. And this, I just want to know. I want to be ready for anything. And I mentioned somewhere in passing, and I think this is probably why he sent the voicemail, that I am really not for right now doing leaps options with value stocks. 2 reasons. Number one, it hasn't been value's day to shine in a while. So as before I mentioned, I want to do leaps with things that I'm pretty confident are going to grow steadily over the next 2 years. Although I'm buying stocks that I think are fair value, let's take Intel, for example. I think Intel has 20-year potential, and I love its dividend. I don't think that Intel necessarily has room to run right now. I don't see them being able, especially with market conditions where people don't really understand that value investing and like why they're a great company, to go up. I think it might take some time. We don't know what's going to happen with shortage. I know AMD, they have competition, NVIDIA, things like that. So I don't think they're a great leaps option kind of stock. But do I want to own them? Hell yeah, because their dividend's great. And I think they're going to, 20 years from now, I think they're going to grow pretty well. The other thing I don't really love about value stocks with the leaps option is when I buy a leaps option, I have full intentions of eventually trying to poor man's covered call them. I want to be able to write calls against them. And with a lot of value stocks that have low PEs, they have low volatility, the options premiums just aren't worth it. Guys, when I buy leaps option, there's a little bit of me that like rolling the dice. Like I get that like that gambler like pit in my stomach feeling. Like this is not 100% foolproof, and I'm sorry if that's the image that I portray. But when I say things like my options portfolio is for sport, the same reason that the Mets coming to bat in the bottom of the ninth and they have the bases loaded and they're down by 1 run, that excitement that I feel, or like a shootout when the Rangers have a shootout, that feeling that I feel, that's how I feel when I buy leaps. So I want to get a little bit of premium. I want there to be like at least the opportunity. And, you know, I don't know. I love doing things with value stocks. I think value stocks are great for wheeling. Outstanding for wheeling, which is why in my Robinhood portfolio, I own 100 shares of Intel and I'm not wheeling them and I'm not leaping them and doing the poor man's covered call. I think value stocks are amazing hedges for doing the wheel, right? It's all coming full circle. I spend so much time like learning each particular option strategy. The only one I've ever really hated was credit spreads. So now that like I'm learning where I can implement each one of these different strategies I learned over time, I feel that I can handle anything. I feel like I can take any market condition and win in the long run. And it's so hard to portray that in an 8-minute video and a 10-minute video sometimes, which is why it's great to be in the Discord, because you guys, and we're discussing this on a daily basis, and you guys get to see that whole evolution of things, right? We have a crazy correction, we're going to buy puts, right? We have a slow bear market, we're probably going to wheel. We have a neutral market, we're probably going to wheel. We continue to grow bullish, we're going to continue to buy leaps. Like there's all these different things that we can do to hedge against any market. And I'm sorry, Aaron, I know you probably wanted me to say like, yeah, that could be a great idea. Personally, for me, I do not like doing the leaps, but I don't like buying options with value stocks. Zow. Cena, what are you retracting there, bro? What are you saying? What are you saying? Trolling? Let's keep it going. I got 2 more, and then we can answer some more questions. Here we go, Michael. Oh, I gotta refresh. Does that mean somebody just left one? Here we go.
Hey, Brad. I have a question about finances and retiring. I am 30 years old. right now I have a 401k with not too much in it, only about 20,000 in it. I had to take some out for a medical emergency that came up. Wondering what would be the best solution. Would a 401k with my company be good, or a Roth IRA? And also, I listened to your last video with talking about the Roth IRA, about when it is too late to open one. So I was listening to that and had a question about the minimum distribution, just how that would work with my wife and daughter if they were to need money down the road and pulling it out, trying to avoid taxes. Okay, well, thank you very much for your time.
Michael, I'm not sure if you're in the chat, but this is an awesome question, and it can be answered pretty straightforward. This is probably one that will make it to a clip on the main channel, especially because I love talking about Roth IRAs and 401ks. First, whatever I'm about to say that isn't factual information is going to be opinion based on what I would do. Okay? There's the little disclaimer. People have reasons for investing in 401ks before Roths. They have reasons for doing traditionals before Roths. They have reasons for not doing Roths at all. I don't know what those reasons are. That's kind of ridiculous. I personally, I played a little game with myself over time. I said to myself, I'm going to, when I first got out of debt, I said, I am going to try and get as much money into my Roth IRA as possible. The following year, I said to myself, I'm going to try and max out my Roth IRA before the deadline, which is April 15th. Sorry, that Skeeter's still around. And I can't go smack and stuff because everything's so expensive. Got him. My next goal was to max out my Roth IRA by April 15th, the last day. The following year, my goal was to max it out by the actual end of the calendar year. My year after that, so now we're talking 5 years of progression here. My goal was to max it out before the end of the year as fast as possible. And I met all of those goals. Now, not even so much a goal anymore, is I max out my Roth IRA for my wife and I on the first day of the year. I have to do a backdoor Roth because of my income limit. So what it looks like for me is on January 1st, I put $6,000 into my wife and I's traditional IRA. When that clears, usually about 3 days later, I convert it to a Roth IRA. All right, so I see the benefits of that as just like $6,000 is enough to go that can go so far that it doesn't matter all the other stuff like Roth IRAs, 403Bs, 457s. The Roth IRA is, there's a reason why, think about it like this, guys. There's a reason why you hear in the government that they're trying to get rid of things like the backdoor Roth and like the Roth IRA. Because right now the narrative is do not let the wealthy make any more money. Do not allow the rich to get richer. And that you hear that regardless of your political stance. This is not a political opinion, right? It is cut and dry that the government of the United States of America does not want people to make more money. So when you hear them talk about things and you want to be wealthy, those are the things you should be doing. And it's a shame that when Joe Biden came out and said, I want to eliminate the 1031 exchange, nobody knew what he was talking about except for the people that he directly hurt. When I heard that, I was like, yep, I need to get into more real estate. So when he says that I'm going to get rid of the backdoor Roth, which he's currently trying to do, which is going to impact me directly, I said, okay, sweet. Then I must be doing the right thing. He's not trying to get rid of 401ks, 403Bs. Because he knows that nobody really takes advantage of those to their maximum potential. But he knows the loophole of the backdoor Roth that they themselves, not his administration, but they themselves created government. They created those loopholes for themselves, and now they're getting criticized for it, so they're backpedaling. The 401k is great. The 401k is going to come with things that aren't outstanding efficiency-wise. They come with fees. They come with less choices. You have to choose an investment that your particular company tells you can. If you work for a great company and they offer like discounted stock shares and stuff, my brother works for a utility here on Long Island, and they give him stock options at a ridiculous price. And I'm like, Jerry, you take all of those. You put all of those you can in. So there's those cases, but I'm also advising him to do that after or during the time that he's maxing his Roth IRA out. So please, highly consider, and this goes for everybody. If your goal in 2021 and 2022 should be to max out your Roth IRA, you'll never regret it. And you can put whatever investment you want in there. You could trade options in there. Get 100 shares of VTI and do the wheel with it. You can put whatever you want in there. It's you trade options in there. The premium is tax free. It's nuts. It's ridiculous. Now to the question about your family, and this is huge. And I don't know if I necessarily got into it in the video, but I'll reiterate this. Oh man, I just can't. People, I just can't understand. They're the ones that made these loopholes, and now they hate them. Anyway, I guess they stood up the statues as well. But when you have a Roth IRA and you have a spouse, okay, a legal spouse, and they have a Roth IRA, and you die. So right now I have, after 6 years of working on it, I think my Roth IRA is probably about $40,000. Okay. And maybe about 10,000 of that is growth. A couple things. Today, let's just say for math numbers, I've put in 30 and it's grown 10. Today, I can take out that entire 30K, no penalty, no issue. They have to give it to me. Any contributions that you make, and this is not conversions and things like that, contributions. Any contributions you could take back at any time. Anytime you want. Don't have to wait till you're 59 and a half. People don't understand this. They think you need to wait till you're 59 and a half. You need to wait till you're 59 and a half for growth. Okay? The quick caveat there is if you take out 30, you're only allowed to replace the maximum for that year. So if I strip 30 down from that, I'm only allowed to put 6 back. Okay? So that needs to be said. But number one, so it's essentially liquid, which is like, why wouldn't you contribute when if you needed the money, you could take it right back out? That's one thing. The growth, 10 grand, is tax-free when I'm 59 and a half. If I die today, there's a couple more hours. I'm feeling good. I'm not really going to do anything that risky. Let's say tomorrow. I die tomorrow. What a manic Monday. My wife takes my entire Roth IRA and she stacks it right on top of hers. Her Roth IRA goes from 40 to 80. My contributions go to her. My growth goes to her. And they're like she put them in herself. As far as the required minimum distributions, in your 401k, when you reach a certain age, the government is going to require you to strip a certain amount of money from that every single year off your principal, because they don't want you to just let it sit forever and ever and grow and keep passing it down. In the Roth IRA, there is no minimum required distributions. It's a great inheritance builder, right? That's another reason why I do it. My wife gets all of that money. She lives to 100. Good for her. She had a great run. By then, it's like $3 million. She dies. It's going to go to my daughter and my son. Kids, when you inherit it down to your kids, they have 10 years to withdraw the money. It's not taxed. It's not penalized. It is a required minimum distribution, but it's a time frame. So let's say Tara had $2 million in there. Brody gets $1 million of it. Avery gets $1 million of it. They have to take that money out in 10 years. They can't let it grow past the 10 years. So the inheritance the buck stops after 10 years for your kids. Right? Like, I say, I'm going to write my will. Avery, let it sit there for 9 years, 364 days. Get as much growth out of that thing as possible. Take out your million whatever. I hope you miss me. If you want to know how dope I was when you were a baby, go back and check me out on YouTube. It's simple as that. There's no other inheritance vehicle like that. Frankly, if I was like terminally ill, God forbid, and I wasn't married, I would find a best friend and marry him for that. Like, hey, we don't even need to tell anybody. I'm going to die. We've been friends since we were kids. You got a family, blah, 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 blah. You're divorced. You got your kids to take care of. Let me do you a favor. I don't have any kids. I don't have any this, that, and the other thing. I'm going to die soon. Can we get married so when I die, my Roth can go to you? And then I have to probably explain it to him. But, damn. The Roth IRAs do. The only thing that's just as good, if not better, is the HSA. And I don't really talk about the HSA that much because I don't have it anymore. But the HSA is, what are they called? Like the triple tax advantage account? Duh. What's it? Oh, wait, hold on. Wait. My job gives me $2,000 on the HSA every year. I have 2 HSA accounts and other. Yeah. HSAs are great because you don't need to take the, right? So you use the money for medical, but you don't have to ask for the money back until you want. So what are the 3 tax advantages of the HSA again? You got, it goes in pre-tax, so it's tax deferred. If you use it for medical expenses, it's not taxed. And the growth is not taxed either. So if you break your leg and you have a deductible of like $200, you keep the receipt and you keep awesome records of that. Your HSA grows for 30 years. In 30 years, you send in the receipt and they send you back $200 tax free. Oh my gosh, the HSA is so dope. But I will say, this damn Skeeter. But I will say, Roth IRA still beats the HSA. HSA is close second. But you need that high deductible insurance is hard to find. Frankly. Great question. Oh man. I really love talking retirement because you want to know why I really love talking retirement? Because when we talk about like stocks and things like that, it's so short term, I feel like. Like I'm not going to really be around to see people, to really see the fruits of their labor, right? But like when I explain to somebody the beauty of a Roth IRA that they didn't know before, and they're like, oh my God, I go to sleep knowing that like in 40 years, they're going to be okay. Where if I'm like, man, Pepsi's cool. Invest in Pepsi, cool, What if you get married, pass along? It would only get passed along if I died, right? If I don't die, they're not going to get it. I don't currently trade with AMC, so I don't know. That's a question for JJ Buckner as well. He's an AMC guy. Trade puts on. I couldn't even tell you. I know nothing about AMC right now, so I couldn't. Sorry, Donnie. I could not speak intelligently on it. If you have 100 shares of it, yeah, sell calls. If you have 100 shares of anything that doesn't have unrealized capital gains that are more than a year, yeah, sell calls. No reason that I can see, with the exception of unrealized capital gains, to not sell options. Not sell options. Being married, do you recommend a Roth separate? You cannot do a Roth IRA together. Roth IRAs are issued to Social Security numbers, and they are one of the few things that is not joint when you're married. So, Diego, that it eliminates an option, right? You have one, and your wife has one. My daughter is 3 years old, and she has one. Brody is 2 years old. He has one. Right. And when they get married, if they get married, do I have to say that every time? Well, how do you know they're going to get married, you big femme man guy? Assume they're going to get married. Yeah, when they get married, they will open one for their wives. Right. And the shame is like, and I joke on Twitter that my daughter has a bigger net worth than I had when I was 35, which is true. But it's more along the lines of, I could think of it more realistically. Me and my wife opened up ours together. My wife and I opened up ours together. And I was 35 and she was like 26. So look at like that difference in age of like when we even learned about them. And then you get people that don't open it because they're like, oh, 6,000 so much. Like I'm putting in, I think, $500 this year for Avery, and I'm putting in $100 for Brody. Last year I put in $100 for Brody in his first year of life, and I put in $250 for Avery. And like most would be like $100, but I mean Avery's is almost double. I think Avery has like $700 in her Roth IRA. Brody has like $400 in his Roth IRA. And then their UTMAs have thousands of dollars in them. And it's like, it's so incredible that in 3 years, Avery's Roth is almost doubled with favorable market conditions that will probably correct. But just imagine like being 26, 27 and telling your parents that you think that you found the one and you're going to get married, or, oh man, Dad, I really wish I had money for this house. And I'm like, oh, this is what I play out in my mind. I think an UTMA by law, it's theirs at 18, right? It's their control at 18. And with a Roth, it's technically under her control now. That's not custodial. Like their UTMA says like my name on it, but her Roth, that's fully hers because it's Social Security number. Like I manage it, but as far as the government's concerned, she's making all the decisions in her Roth. But I picture this like day in my head where Avery's like struggling with money or wants to make an investment opportunity. I prefer it be like, Dad, man, there's this quadplex and I really think I can return this rental income. And I don't want to ask you for money because that's not what I was raised with. Man, do you know anybody I could talk to or a way that I can get like $500K? And I'm like, oh my God, yes. I totally forgot to tell you. I've been investing $1,000 a month for you since you were 3 years old. You have like $650,000 in the bank. I can't wait for that day. The day is going to come. The day is going to come. Is a Roth IRA like a Roth IRA, Donnie? A Roth IRA is the same as a taxable brokerage account, except it's not taxable. So it's an investment vehicle like the car. Figure like a Roth IRA is the shell of the car, and then the investments are the seats, the steering wheel, the radio, and everything else you put on the interior. So like a Roth IRA, like say inside your Robinhood account right now, you have 25 shares of AMC and you have 50 shares of Pepsi and you have 30 shares of that, right? And that's going to grow. And then when you sell them, you're going to pay taxes on that. If they were inside the Roth IRA, when you sold them, you don't pay any tax on the growth. None. No tax. No taxes. Regardless, no taxes. Taxes can go to 1,000,000%. Right? That's what Kamal wants. They're going to go to 1,000,000%. Sorry, can't tax a Roth IRA. And if you want to change that law, you're going to screw over so many people in politics that you might not make it out. It's one of the Roth IRA. The backdoor Roth is one thing, but the Roth, because everyone asks me this all the time, what if they stop the Roth IRA? First off, if they end the Roth IRA, they're not going to punish those that have invested. You're going to be grandfathered into that. They may stop the Roth IRA for what it is, but they're never going to be like, oh, remember how for the last 40 years we've been telling you that? It's not 40. But remember how for the last 25 years we've been telling you that that's going to be tax-free? It's not anymore. Sorry. That's not going to happen. Because, like I mentioned before, the politicians are the one that made these rules. So, yeah. Oh, man, I love it. Contribution for kids, also $6,000. Yeah, well, the max for kids, your max is taxed earned income. And somebody asked this amazing question: is premiums earned income? No, they don't consider passive. The IRS doesn't consider passive income, like real estate income. They don't consider passive income earned. So unless you file with them as a day trader, blah, blah, blah. That's a long story. But Yeah, the kids is 6,000. The reason that I only put in 500 for Avery is because it has to be earned income. She works for my business, and I have to give her a reasonable wage for the things that she does. What does my daughter do? She helps me decide thumbnails. She helps me shred paper. Paper shredding is a great job for a kid. She helps me tidy up the studio. She helps me vacuum. She helps me pick stuff up. When I do videos, I just throw note cards all over the place. She helps me pick those up. What does Brody do? He does a little bit of baby modeling. He, like, maybe I don't put his picture on the internet, but maybe if I have to set lighting, I'll sit Brody somewhere and I'll take pictures of him and I'll readjust the lighting. So he works as like a baby model, and he makes like $6 or $7 an hour as a commission 1099 worker. And that's fantastic because if you think about it, payroll is a payroll deduction for me and my business. So when I pay Avery $500, right, it's tax deductible from my business. It's not enough money where I can't claim her as a dependent, so I still claim her as a dependent. And she files, and that's under $12,500, so all of that money is tax free to her too. So when you have kids that work for your business, it's amazing balls. Oh, sorry, I get some more questions. My wife and I have been reworking the budget, open a self-directed Roth IRA for her so I can start making contributions on behalf. Since I'm so, yeah, great, awesome, yeah. Robin, UTMA, yeah, that's correct. It's, I don't know the acronym, stand by. Hold on, I don't know what it stands for. An UTMA is a Uniform Transfers to Minors Act. It refers to an act that allows a minor to receive gifts without aid of a guardian or trustee, gifts that include money, patents, royalties, real estate, and fine art. So, like, for example, amazing balls. So, for example, like a Roth IRA, you have to be paid. You can't put birthday money. I tell my students, you can't put bar mitzvah money into a Roth IRA. It has to be earned income. Now, the debate to this that everybody knows I hate, and I'm not even going to talk about it. I'll whisper it. That's how much I hate it, and I don't want to talk about it. 529s is the alternative to UTMAs. So, like, great grandpa was just in town, gave Avery and Brody $1,000 and said, "Hey, Brad, can you make their future better with this money?" I said, "Of course I can." I used it. Grandpa gave Avery 1 month of gymnastics, gave Brody 1 month of swimming lessons, and the rest of the money went into their UTMAs. And I said, "Pop-up, just want to let you know, great grandpa, that Avery is going to be going to gymnastics on you for 1 month. Here's a photo of her at gymnastics. She loves it. Pop-up, here's Brody swimming in the pool, splashy, splashy. He loves the pool. He takes a smile. Thank you for that." And just to let you know, she bought 1 share of the total stock market and 3 shares of Disney. And Brody bought 1 share of the total stock market and 2 shares of Nike and 1 share of Caterpillar. So that's kind of how that works out with the UTMAs. But for an UTMA, I can't take that money back out. It's hers. So, like, if you think you're going to have a dirtbag kid, everyone else asks me that, like, what if they're dirtbags, Brad? What if they're on the drugs? They're going to use that money for drugs. I'm like, first off, that's my fault. With all due respect. I mean, I'm sure there's some rare cases where you can raise your kids to a T and they turn out on the pole. Like, I get that, whatever. So be it. You know, I tried. I did my best. But the other thing is, I could forget to tell them about it until they're 30. Like, I don't think Avery's going to turn 18. She's going to jump on the internet and start scrolling like, does Avery Finn have a Vanguard UTMA account? Enter. You know, like, I don't think that's going to happen. So I don't know. I'm feeling myself right now. No pain. Halloween day 10 is hitting me nice right now. You can sell puts inside your Roth IRA. You can get the same profit. You actually get more profit because you don't pay taxes on it. 59.5, you can withdraw your growth. You can withdraw contributions at any time. How do you open a Roth IRA? I have many videos. I chose Vanguard. Going back now, you could choose whatever. Most brokerages have them. Even M1 Finance has them. I think even Webull has them. Don't go Webull. But M1 Finance, I'd be perfectly okay opening one. But if you go to your major brokerages, I'm a fanboy of Vanguard. All my kids are with Vanguard. JJ's a fanboy of, actually no, he likes Fidelity for his brokerage account, but his Roths are with Vanguard as well. You go to Roth IRA, You go to Vanguard, open an account. Look, this is really important. I do have a video on it, but on Vanguard.com. I am going to get all these emails now that are like, you started opening an account. What we offer. Oh, perfect. So look at this. What you know about rolling down in the deep. So look, I'm on Vanguard right now. So yeah, I use the save preferences. So what we offer, okay, here is investment products, okay. Here's the account types. So here's your IRA. This is going to be your traditional and your regular. Here's your individual. That's just going to be like a taxable brokerage account like Robinhood. Here's your 529s. 529s. Here's your UGMA or UTMA. UG, I don't know what that is, but it's a different acronym. Small business retirements, 403Bs if you actually work with them. So all you would do is you'd click IRA. They would tell you about the two different types of IRAs. You would say, open an IRA. See what is Roth, what is traditional. I'm going to open a Roth IRA today. Boom, this is going to be a new account. And then you just go through the whole process there. So simple as that. Simple as that. Oh gosh, I love them. But I do have many videos on that. With all due respect, if you die, how are they going to find out about your accounts? They will find out about my accounts. 1, from my wife. B, if my wife goes with me, my will and testament has everything in it. I've lost both my parents young. I lost my mom at 50. My dad died at 65. Sick for many years. I want to say 65. I'm like pretty good run, but my dad suffered from many different cancers starting from his early 40s. So I think of him sick forever. But if there's one thing I learned from my parents passing away early is once you have things that once people need to know things that you don't tell them every day, you should have term life insurance, which is why I have term life insurance. And you should have a will and testament. And you can go on to LegalZoom. It doesn't even have to be that serious. I think when Tara and I first started dating, I just would have like our bank accounts and things like that on a piece of paper in the safe, and I only got hooked up with a lawyer after my dad passed away, and he was friends with my dad even before he was my dad's lawyer. And he was like, listen, I think when we went to pay him, he was like, you don't owe me anything. Your dad has bought me so many beers in my lifetime that I could never take $1 from him. And in fact, I owe you one too. So I want you to come in with your wife and write a will. So I've done that. And that's all my wife knows, but my kids would find out my will and testament. Money is not taboo in my house. So, my brothers, I have 2 younger brothers and a brother-in-law. My 2 younger brothers, who I say younger, Gerard is 37 years old, and Danny is 32. They also are very, very well equipped with what I have going on. My youngest brother, Danny, is the godparent to my child. I didn't forget Gerard. He actually asked if he didn't want that responsibility. So it's kind of like if you're sitting near an exit and emergency exit and you don't want to sit there. So Danny being both my kids' godparents, he also knows exactly what they need or what I'd want to do for them. Diego, I mentioned this briefly. Premiums is not earned income as far as the IRS is concerned. They'll tax you as earned income. Don't get it twisted. But passive income, they don't consider earned income. How I don't see your kids making it to adulthood. Robin, that's the goal. I mean, I would like my kids to get to adulthood and learn how to make money and the value of money that I learned earlier. I also want to make sure that my kids, when I go, are good to go. Like they're set. But I am not about like giving my kids everything, and I don't want them to know anything they don't need to know unless they ask, right? Like my buddy, we went to this Halloween thing. I'm not a dresser-upper, so I went like this. And everyone's all dressed up. He's like, oh, cool costume, bro. I'm like, do you know what it is? He's like, ha ha. I'm like, no, do you know what it is? He's like, what's your costume, Brad? I'm like, I'm an undercover millionaire. He's like, fuck you. You know, like I more care about like the process and like that's what I want for my kids. But I am also a huge advocate that you need to take care of you. Like people, when I say that all the time, like my wife is my number one, even before my kids. You know, my wife is my number one. If my wife and I aren't happy, my kids can't be 100. So she's still my number one. And as far as like my kids having money, dude, I'm going to try and spend as much of it as I can before I die. As much as I can. Like, I want to die on a beach, Santorini, like, drinking red wine or something. What are they drinking in Greece? I don't even know. Fidelity is confusing as hell. I'm with you, bro. I am with you. That sucks. I keep a box with links to everything in my closet. Charles, put the thing I hope it's in a safe in the closet. In a firebox. Go to Staples and buy. You don't even have to go to Staples. Go to Amazon and buy yourself a little firebox safe. Please. All it takes is for you to have one friend that had their house burned down. It wasn't even a big fire, but lost everything. And he lived, which wasn't a pain in the ass, but like, do you know how annoying it is to get new Social Security cards, to get new birth certificates, to get new Social Security cards for your friends and for your kids, to get new passports? These are life hacks that not everyone talks about. Have a fire. If you have something that is going to be annoying to replace, go to Amazon, get yourself. I think my first one was like $25. I now have a proper safe because of my firearms, but have like a fireproof safe, please, with your stuff in it. I beg you. Oh man. What I miss? Donnie, so you never had to worry about taxes. I never worry about taxes. Taxes mean I'm allowed to make money. Guys, the video I can't wait to make on YouTube is, guys, I paid $1 million in taxes this year. That's going to be my retirement sign off from YouTube. My last video. Guys, this is going to be my last YouTube video. I had to pay $1 million in taxes this year. That's my goal. I'm super efficient though. I read the tax code. And I also have an amazing, probably annoying relationship on his part with my CPA. But he knows the type of person I am. He knows I want to know stuff. Family trust be a good thing. Yeah, you can get a family trust if you want. A family trust is kind of just what it says. Like, if you go and you don't think your kids are old enough to handle money, or you don't trust who the money's going to, you know, like a trust is good if I didn't think my brother Gerard can manage the money for them, you know, and could things change after I die? Yeah, but you want to know what? I'll be gone. And like I said, I'm going to be making sure that my kids know enough about making money and the value of $1 that they probably won't need much from me. My wife joining in. Welcome, Diego's wife. I have a W-2 job. Congratulations. I pay my daughter to help me with work-related tasks. Can I deduct that when I do my taxes? Unfortunately, you cannot. But this is, don't quote me on this. Actually, you can quote me on this. Clarify with your CPA, because I did do this. I'll give you an example. If you could have a small business that is related to your W-2 job, okay? You don't need to have LLCs and legal small business guys. A sole proprietor is the same exact thing as an LLC without the limited liability, okay? So if you have an Etsy shop, you don't need an LLC. You are a sole proprietor, which is subject to the same deductions as any other LLC. So if you had a small business that was related to your W-2 job and your daughter helped with that, you could pay her. But you need to be able to prove that A, she did the work, and B, it was a fair and reasonable wage. Like, I can't pay my daughter $50 an hour to shred paper for me, right? That's just red flag issues. Like what that amount is, you have to talk to your CPA. So let me give you an example of how you can manipulate that a little bit. My W-2 job is I'm a teacher. So how can I have my daughter help me with teacher things? Well, she could help me grade papers, or she can help me help me staple. She can help me organize folders. She can do lots of things, right? But I'm a teacher. I can't deduct that. But if I was a tutor and I had kind of similar tasks as what I taught, yeah, my tutor is a sole proprietorship. She's stapling. She's not stapling for my W-2 job. She's not sorting folders for my W-2 job. She's doing that for my tutoring business. So I guess it just depends on what your W-2 job is, right? If you're making side money, then yeah, if it's related to your W-2. But no, like if I was a waiter and she was washing my uniforms for me, that's not a deductible task. But if I was a waiter and on the weekends I was moonlighting as a private caterer and she was the person that washed my uniforms for my catering business, that's a deduction. Okay? Hope that helps. It has to be right on your business. On your recent Leaps video, you talked about buying when implied volatility is below the average. What resource do you use to find historical IV? Great question. Many people have asked me about that, Josh. So I use, on a basic sense, my brokerage account. Vanguard and Fidelity will give you very basic information, but I do pay for Market Chameleon. So that's the one that I pay. I forget what the other one is that a lot of people pay for, but I've used Market Chameleon that used to be free. As of like a year and a half ago. And I'm not saying it's worth the money for just that. I use Market Chameleon for a couple other things, and it just so happens that implied volatility is in there. So that's kind of why I didn't mention it in the video, because I don't want people to be like, oh, if I want to know historical implied volatility, I should go get Market Chameleon, because I feel like if you use it for just that, it's not worth the value. You'd have to find other things that Market Chameleon has to make it worth the value. But I will say this, and this is an unfortunate circumstance, and maybe somebody can go out there and get this information and give it free. You probably would do quite well. I don't know many sites that offer it for free anymore. Same thing with like options premium history. I don't know many free sites. So I'm sorry that I have to say that, because I would love to be able to give you a free option. I've actually thought about like disclosing that, or having like a login for my Discord to be able to go look, but I know that's super like not allowed. And then I thought about having my Discord be able to like give me stocks, but then I didn't want there just to be a constant flood of like me just constantly having to look up tickers for people and implied volatilities. I'm going to figure out a way to implement it into Discord one of these days, but that's what I use Market Chameleon. Could have gone as a physics teacher. No, it's the weekend. I'm not trying to be a physics teacher any more than I already have to. Fidelity is the Matrix. Okay, good. It is a fire safe. Thoughts on Vuzi in light of Meta? I mean, Oculus is very different, and I feel like Oculus is a competitor of Vuzi, but Vuzi never intended to necessarily break through into the consumer space, right? They are very, very a commercial product at this point. They've dabbled in the consumer world, but I don't think their goal has ever been, from my research, and I could be wrong, I don't think that their goal is VR. I think their goal and what they really think is going to happen on the consumer level as far as their product is concerned is they want to have this. And they want you to be able to put this on and not take your phone out of your pocket. And it sounds ridiculous, but look at Apple Watch, right? Like, I don't have an Apple Watch. My brother does. And he's like, I don't take my phone out of my pocket anymore. Everything is right here. And watching him text on, he's like, what the fuck are you doing? And he's the type of guy that understands Vuzi's, that understands Vuzi's vision, where like right up here it'll be out of view, but it'll be in your peripheral. If you get a message, it'll show up on your glasses. Kind of like those, some of you have probably seen the cars where it displays a speedometer. It displays your speed like right on the windshield, right? Like that. That's the type of stuff that Vuzi's going for, on top of their already extensive military and commercial side. So I don't think they care that much about meta. If anything, it might help bring to the forefront the fact that we can have glasses that do stuff. In Mark's presentation, like how he was talking about the work at home, like mixing the real world with virtual reality, and he had like the computer screen that was right out here. I think that would be more long-term Vuzi's play. But I don't think Vuzi wants to like put on a headset and like do that. No. Luciano, I appreciate it, buddy. It was good times. Sunday, my wife was like, we were at the barbecue. She was like, go live tonight? I'm like, yeah. She's like, all right. I'm like, I missed last week. I was pissed. I'm not missing it twice. Donnie, I am a UFC watcher, but I missed it with where the hell was it? My brother's like, are you watching this? And I'm like, it's fucking noon. What are you talking about? What am I watching? I'm like thinking to myself, it's not, he knows I don't watch college football. The Rangers played on Friday night. I'm like, what the hell is he talking about? He's like, oh, the main card, bro, main card. I'm like, what? No, I missed it. I'll go back and I'll check it out. Oh, Dylan dropping some knowledge. So who asked that again? Was it Josh? Josh. We got Dylan right here says, bar chart is a great resource for IV. Dylan, thank you so much. I will check that out. And if that is the truth and truth and truth, then I'll post that. Thank you. I appreciate that. Great value, man. James, take it easy. Ow. Let's get to Bill. Ooh, man. See, now when I click the voicemails, I'm like, what's it going to be? What's it going to be? Running up on 2 hours. Love it. Here we go. Here's Bill. Bill?
Brad, my question is concerning a traditional retirement account.
Let's go. Another one? Oh my gosh. You guys are making my night right now. Let's go. Don't stump me. Don't stump me. Here we go.
Brad, my question is concerning a traditional retirement account and a Roth IRA. I have both a traditional and a Roth IRA. My traditional account is much larger than my Roth. When I asked my current financial advisor about transferring money from the traditional to the Roth, he focuses on what my tax bracket will be on retirement. My concern is paying the taxes in the traditional account on the gains on what I've put in, versus if I transfer the money now and pay the taxes and transfer it to my Roth IRA, and then that way it will grow in the Roth tax-free. Am I being overly cautious, or should I start transferring the money?
First off, thank you so much for questioning your financial advisor. Guys, if you are paying a financial advisor right now, it's time to consider stopping that relationship. There is way too much free resources and intellectual knowledge on the internet that is free and unbiased. Wise man once told me, if somebody is profiting off the advice they give you, that is not advice, that's manipulation. And many people will say, like, you're a YouTuber, you get paid. First off, I was on YouTube for 3 years before I made any money, and I loved it. And actually, since I started making money on YouTube, it's gotten worse. I like it less. People that are giving you advice and profiting from that advice are manipulating you. I'm sorry. And most financial advisors are the guy your dad used, or my friend's cousin from college. It's never somebody that you sought out. Very rarely do I talk to somebody that talks about a financial advisor, and they're like, yeah, I really wanted a financial advisor. So I got on the phone and I called up 6 different financial advisors. I sat down with each one. I asked them a couple questions. I vetted them. I interviewed them. And then I picked the one that I really thought was best for me. That's pretty much never happened. Ever. And the worst part about it is they know what to tell you to make you feel like you're an idiot. They know what to say or the big words to say to make you scared. That's when we're at our most vulnerable. That's just what I have to say first and foremost about financial advisors. They are making money off of you, which is fine. Let them make money off of you. You know? And if they want to come back and criticize me, you have a Discord, Brad, you make money off of that? Sure do. I don't give financial advice. I share my story and let people learn from my F-ups. I post the things I do and let people ask me questions why. I do not give financial advice. I'm being paid for my time. And it's not that great. Oh, Robert driving the Bucky. You got it, Paul. That's what my friends call me, by the way, Bucky. What did I tell you? If I'm ever walking through a crowd and you need to get my attention, don't scream, Brad. I won't look. As far as the Roth IRA conversion question, tax question, things like that, this is actually something I've been thinking about. I haven't made a video because I don't know if I'm right. So maybe this is the forum to bring it up, and maybe this will be the video, and then somebody could tell me I'm wrong. The whole debate of tax deferred now versus tax deferred later, as far as at the time of contribution, that is a tax bracket issue. Okay? I think that conversation changes 100% and completely when we're talking about got that Skeeter. Finally got him. All night. I think that conversation completely changes when we talk about conversions. Hear me out, and then you guys could tell me if my thought process is completely whack. What's the difference between tax deferred and tax free? In a tax deferred account, 401k, 403b, traditional IRA, you put the money in now. It's tax deferred, meaning you don't pay taxes on it. It lowers your W-2, and you pay taxes later at 59.5 upon withdrawal. A Roth IRA, which is also a taxable account, which is also tax efficient, is the opposite. You get taxed now, it grows, and you don't get taxed on the way out. Okay? So, for people that are going to be taxed more later or think they're going to be taxed more later, right? We like to get taxed now and then take it out later. For people that think they're going to be taxed less later, well, now when you're making that higher tax, you're in a higher tax bracket, you go tax deferred. A couple things about that. Number one, if you learn anything about money, you learn that you are not going to make less money later on in life. If you've been watching my channel, if you're in my Discord and you've learned anything about money, you are perpetually going to make more money for the rest of your freaking life. Simple as that. People ask me that all the time. Well, in retirement, Brad, aren't you going to make? No. I'm going to retire from my W-2 job when I'm printing so much money I don't have to teach anymore. And my side businesses are going to continue to grow money. And my real estate portfolio is going to continue to make me money. And my dividend portfolio is going to continue to make me money. And then I'm going to get a pension. And then I'm going to get Social Security. My tax bracket is never going to go down in retirement because that's what the financial advisor is going to tell you. Well, you're going to be in retirement, you're not going to be making money, so your tax bracket's going to go down. Ask them this. How much is the tax bracket going to be in 20 years when I retire? See what they say. They're going to say, I don't know, less? How the hell do you know that? It just makes me so mad. Okay? So I hope that answers your question. I'm not going to get triggered. I'm not going to do it, Brad. Brad, take a sip of your beer and calm down. So hear me out on this conversion thing. This is what I'm thinking. If I had money already, because he's saying the money's already there. We're taking out the whole at the time when we put money in. The money's already there. should he roll the money now, get taxed now, and then let it grow and never have to worry about it for the rest of his life tax-free, and be able to roll to a spouse and have them have it tax-free and all the other benefits of the Roth IRA that we already know? Or should he keep it there, untaxed, and then let it go to this land of the unknown at some time where we think you're going to make less money and we think you're going to be taxed less later on down the line? I like to deal in absolutes. I like to deal with things that I can control. I can't control my income 20 years from now. I can't control the tax brackets 10 years from now. I can't control the laws that are going to be in place in IRAs 10 years from now, 20 years from now. I can control moving that over and never having to think about it, those options ever again. Never having to think about it again. That's my first point. Let's take two scenarios and hear me out on this, the whole taxed later thing. There are some things that I see to be fact, and there are some things that I see to be opinion, or at least wishy-washy. And please, by all means, if I'm talking out of my ass, let me know. I think it's a fact that over time, the value of $1 is going to go down. That $1 sitting inside that traditional IRA is now more valuable than it will ever be. Okay? I think it's wishy-washy, what the tax bracket is going to be in 20 years. And I also believe that I don't think it can go that much higher than it is right now. I don't know why I put that in quotes. What I meant was like that much higher is relative. Like, will we ever see a day when we're taxed 70%? I don't think so. I think politicians will keep a steady system of checks and balances where we'll go high 30%. And I'm talking, this is marginal rates, right? Not your actual fixed brackets, but your marginal tax rate. Maybe it'll go down a little to 22, but we can say between like 20 and 30% marginally. Okay? I think that's fair to say throughout time. And I tell you that to tell you this. If I tax that $1 now, I know that I'm going to tax a small portion, 22% right now, and I'm going to take that money and the rest of it's going to grow tax-free for life. If I have $1 in my traditional and $1 in my Roth, and they're invested in the same exact investment, they're going to grow and the growth is going to be identical. But when I pay taxes later, I'm going to pay taxes on that $1 that doesn't have the same value of $1. I only know this because I'm a freaking weirdo. But in 10 years, with an average inflation rate of 3%, $1 is going to have the value of about 78, 79 cents in 10 years. So, in 10 years, you have to pay taxes between 20 and 30% on $1 that really only has the value of 79. So, right now, I could take $1, I could pay 22 cents of that, 22%, and then I can put the rest away, right? That other 78%, I could put that away and it grows forever. Or I can wait, I can have that $1, I can take the 22 cents off, but I'm not taking 22 cents off $1 in 10 years. I'm taking 22 cents off of 79 cents. So I can either be left with 80 cents now or 50 something cents later. That is the reason why in that position, and I've talked about like the Roth IRAs and converting 401ks and everything, I'm getting money to my Roth IRA as fast as humanly possible when I can. The day I turn 59 and a half, I am going to be starting my Roth conversion ladder, and I'm going to be putting as much money into my Roth IRA and paying the taxes on that day regardless. Now, if I have hundreds of thousands of dollars, am I going to take $100,000s of dollars tax hit on that day? No. But am I going to leak 10 grand in every single year and pay $2,000 in taxes? Yes. my thing is pay the tax right now on the full dollar as opposed to paying the tax on a value that is way less than $1 later, but is still taxed as though it's $1. The taxes on the growth are irrelevant because the growth is going to be equal in the traditional and the Roth. If you keep your money in a traditional IRA, and like I said, if I'm wrong, let me know. If I keep my money in a traditional IRA, I'm going to pay taxes on the growth when I take it out. And I'm going to pay taxes on $1 that's not worth $1 anymore. If I roll it, I am only going to pay the taxes on the $1 now, and I'm never going to pay taxes on the growth. To me, that adds up to less taxes. And what is your financial advisor going to say? Oh, the tax rate could go down to 10%. No, it's not. Get out of my face with that. No, it's not. It's going to stay. Look at the tax rate. It's going to stay there. But the value of your dollar is going to go down. I wish I could draw a graph of this. The value of that dollar is going to go down exponentially if inflation continues. But you know what happens when you roll money into a Roth IRA and you put it into an index fund? Your financial advisor doesn't make any more money off of you. You know what happens when you put money into a passively managed index fund that tracks a broad-based market like the S&P 500 or the Dow Jones or the total stock market? Your financial advisor stops making money off of you. That's why they don't freaking tell you about it. Show me the financial advisor that's like, you know what? VTI would be a really, really great play for you. How am I out of beer right now? This is effing ridiculous. All right, what did I confuse people? Hold on. What's the difference between a standard brokerage account and a Roth? Standard brokerage account, you get taxed. You put money in taxed, and then when you sell, you get taxed. In a Roth, you don't get taxed upon sale. They're not taxed similarly. A brokerage account, you're taxed. You're taxed on the money coming in. You're taxed on the growth coming out. A Roth, you're taxed on the money going in. You're not taxed on the money coming out. Oh, we got a joke? Photons are lucky. They never get baggage charged at airplanes because they're always... Yikes. Oh, God, I love a good physics joke. My job offers a 403B and a Roth 403B. I can choose to contribute a fraction. The caveat is the employer matches an astronomical 25% on the tax deferred, but nothing on the Roth. Sounds good. Yeah, like I said, the contribution side is different. That's personal preference. It really is. I mean, a hedge against it. Put 50 into the traditional 403B and 50 into the Roth. Okay. Get the 25%. I mean, at least get that 25% match. I go back and forth. Some years I put half Roth into my 403B and 457. I think this year I'm not, because I need the tax deferment, right? Because here's the other beauty of tax deferment that nobody talks about, right? So every dollar you put into your 403B, your 457, your 401k, I'm using the 22% tax bracket again. That's pretty much my marginal tax rate for federal and state tax. Every dollar I put in, I save 22 cents. Well, if you take that 22 cents, you go to the bar with it, that doesn't win you anything. But if you take that 22 cents and invest it and it compounds over time, that's how tax deferment is amazing. It's amazing. Moose's Lake. You can now talk in the chat. Thanks for the subscription. So tax deferment is only good if you're going to use that tax savings to benefit you, to pay off debt or to invest, right? But if you're using that tax deferment to just blow that 22 cents on the dollar, then you might as well just do the Roth, pay the taxes now. Split it up. You and your Roth. Like, these are efficiency things. These are not, no one ever got to retirement as a millionaire and they're like, son of a bitch, I should have put more into my Roth 403B. Why the hell did I put all of that money into my traditional 403B? Nobody ever said that. It's efficiencies. You know, you might say, man, it would have been pretty dope if this money was tax-free right now and I would have put it into the Roth, but I'm doing pretty dope right now, so it doesn't really matter that much. That's the conversation you're going to be having with yourself. Oh, yeah, it's already taxed. 401ks. 401k money is pre-taxed. Yeah, it is. Inflation will always continue. Learn the present day value formula. It's muy importante. If you see, if you watch my fair value of a stock video, I use the present day formula because when you figure out the fair value of a stock, right? The fair value of the stock is the sum of the future cash flows. So to know the future cash flows, you have to know the present value of a future cash flow. Blah, blah, blah. I'm talking in circles. So check out that video and you can see. It's good to know like roughly what a dollar is going to be worth in 10, 20 years at a standard inflation rate of about 3%. You know, I know a dollar in 10 years, a dollar is going to be roughly 79 cents. In roughly 20 years, it's going to be like 52 cents. In 30 years, it's going to be roughly 41 cents, things like that. Have you given any thought to the proposal of government eliminating the Roth conversion? Yeah, we talked about that before. They might stop it. But you want to know the beautiful thing about them stopping it? And man, we grow up our whole lives thinking like, why the hell do we limit a president to 8 years? And why the hell do we vote every 4 years? You never really understand it until you're really, really dissatisfied with the current administration, right? The left had to suffer for 4 years praying for an election day, praying for these incredible changes to happen that we're now seeing now that Trump is not in office. They were praying for the golden age of what is now 2021. Right now, the right is going through the same exact thing that the left went through. So if the right is really, really upset about the left wanting to change the Roth conversion, who's to say that if the right came back into power, they couldn't just bring it back? Play it back. So I obviously think about the Roth conversion because it would affect me, right? And that's even more to say why I can't wait for January 1st to get it in there, hoping that that doesn't change by January 1st. But there's certain things that we can control and there's certain things we can't control. And you can be angry. They got rid of the Roth conversion ladder. They got rid of the backdoor Roth. I'd be pissed. I'd be like, damn it. But that is what it is. I'm a positive thinker. And I also know that I'm a great strategizer and I'll figure it out. I'll find somewhere else to put that $6K. You know, it'll be okay for me. I've thought about it. It makes me angry. I think the 1031 exchange is going to hurt more people than the backdoor Roth, to be honest. But maybe our next administration would come out and say, we're going to make the 1032 exchange very similar to our previous 1031, you know? I don't know. Who knows? Who knows? Usman's going to win that fight, Donnie. Dude, Usman's going to win that fight. The guy's untouchable. Mark my words. Maybe next Sunday you'll have to hop on and call me a liar, but Usman's going to win that fight. A traditional IRA loses its tax advantage after you reach a certain income. I believe it's 198, where the Roth you can always backdoor, at least for now. Sounds right. I mean, there's always tax advantages, but like you mentioned, like there's a threshold for everything. You know, there's a threshold for everything. And some people want to say the Roth is bad because you might be taxed less later. So then you're screwed, right? Because you put money in and you got taxed now. And then later, yeah, if you put money into your Roth IRA, yes, you are risking the fact that you might be taxed later. Where if you take tax deferment, you're running the risk that later you can be taxed more. The point that I'm trying to make is if you invest in either one of those for 20 years, you're going to have so much effing money, taxes won't matter. Yeah? If I put $6,000 a year into my Roth IRA and it doubles every 7 years, there's no way in 30 years I'm going to be saying to myself, damn it, I can't believe I'm being taxed less than. No, it's not going to happen. I'm just going to be going like this, brrr, count the money through the machine. Brrr, brrr. And the same thing with the 401k. If you max your 401k at $19,500 for 20 years, you are not going to get to retirement and say to yourself, oh man, I'm getting taxed more now. Shit. No. You're going to be saying, brrr, brrr, brrr. You know, yeah. Lost a sub. Trust me, bro. I lose like 50 subs a day. Hop on the list. You'll be back. If you know what's good for you, you'll be back. Remember when I thought I was going to hit 100,000 subs? Those were the days. Those were the days. Can you list every form of passive income you have? I can try. The passive income piece would probably have to come for me because people, I think, define passive income in many different ways. Here's how I define passive income. I define passive income as putting in a ton of work up front and then doing little to no work and being compensated later. So I consider YouTube income passive income. To be honest, I would say about 80% of my monthly YouTube income comes from videos that I released more than 6 months ago. So there becomes a certain time value where after a certain amount of time, I don't think that video owes me anything anymore. And I consider that passive. Like, yeah, the video on, I'll give you an example. So the video I just did on the dividend portfolio, I think the video came out to about 18 minutes. It took me maybe 35 minutes to record. And it took me another hour to edit. And I pay somebody for the thumbnail. So all in, 90 minutes of my time. Hold on a second. I'm a full disclosure guy. So you tell me if you think this is passive income. Because I think that's like pretty important. Hold on, I'm getting there. Okay, here we go. Desktop. Here's that video. So that video took me 90 minutes to make, and I released it on the 28th. So it's been out for 3 days. It's made me $60 US so far. And you can see this graph is pretty steady. Now, I'm going to be honest. It's probably going to come up and spike for like maybe a day or two more. And then it's probably going to level out. It's not going to do crazy things. So like, do I consider this video for me to be passive right now? No. I had to work on this video. I really did. But let me give you another example. Let's go to content. I'll pick a video from a while ago. Let's go. Views. Let's look at a video that has like over 250,000 views. Okay. So here is the old, oh, I wonder if you make that face in prison video. This video was released on January 14th, 2021. It has made me $8,224. It gets about 500 views per day. And it makes me anywhere, let's see. So the 19th, it was at 8,114. It makes me about $10 a day. I consider that extremely passive income. So that's one. I consider my Discord passive income because I really enjoy the time that I put into it. Never feels like work. Affiliate marketing, I consider passive income. Dividends, I consider passive income. Interest that I make from loan money that I lend out, I consider that passive income. Sponsorships, I consider that passive income. People don't, but I consider that passive income. Like when I do a placement into a video and they pay me and I was going to do the video anyway, I consider that passive income. I don't consider like consulting calls. That's not passive because that is time and I don't always love it, to be honest. I have another YouTube channel for my physics. I consider that passive income. I have a course. That course is passive income. The podcast, same as YouTube, I consider that passive income. So I got a bunch. Income sources, though, my accountant hates my guts. I probably have 12 to 15 different income sources every single month. I got my W-2, YouTube, affiliates, sponsorships, dividends, the course, the podcast, tutoring, consulting, the other YouTube channel. Maybe that's it. I've between 10 and 12 different income sources every single month. Busy guy, working my butt off so that I don't have to work anymore. Wait, where's theta what? Theta. Why'd you say theta, Tim? Theta what? Donnie, take it easy, bud. That's why I asked how freaking much are you putting in at a time. What are you saying? What? Huh? Robin, what are you saying? I didn't say anything about when you said 100K. What? What did I miss? Sorry. MD says, I sold a covered call 3 months ago, strike 22.50, the price of 20, around expires in 2 weeks. Still in the red on premium. As long as I do nothing, it should inspire worth us. Okay, cool. Passive's passive, yeah. You can buy 2 shares of HPQ. I can. Yeah. To be honest, I'm living off of my W-2 job, and every single dollar that comes in elsewhere, I invest in my kids, and that goes into investments. Whether it's I give my kids, I invest $1,000 a month for my kids, and then I put the rest in, and that's all from everything outside my W-2 job. I bought a call and sold a put together. Yeah, that's a debit spread. Depending, Spider Mark. That's a credit. I mean, that's a debit spread. Love them. The pros are you can make a lot of money. The cons are you can lose all the money that you paid for your max loss is the money that you put into buying your call, and your profit is infinite. So those are the pros and the ultimate pros and the cons. Wait, what did I miss? Charles, what did I miss? Robin said, depends on how many times I watch it. Charles says, this is so. What did I miss? Oh, data is passive income. Yeah, time, right? I think Dylan means, what did I say, Dylan? No, straddle is selling. So a straddle, I always confuse straddle and strangle. So straddle is the same exact strike and expiration, right? Where a strangle is the same expiration, same strike, different expirations. But I'm pretty much saying that, straddles will sell. A synthetic long call is not a poor man's covered call. It's a little different. Hold on. There's so many freaking names. Synthetic. I just don't want to like, I'm not going to pretend like I know them all off the top of my head. Like, I'm not that kind of asshole. Synthetic call is an option strategy to create unlimited potential for a game with limited loss of risk. Synthetic call is an option strategy that uses stock share and a put option to simulate. Oh, so all right, so what did you say that I missed? Oh, I bought a call and sold a put. Oh, all right. So a poor man's covered call is you buy a call and sell a call. Yeah. So if you buy a call, you're going to sell that put as downside protection, right? Okay. Synthetic call also referred to as, let me put this up for you. I'll show you what I'm looking at. Guys, Investopedia is dope, by the way. Yeah, so here's essentially what's going to be important. Let me try and make this a little bit bigger for you guys. Meet me at my spot. Catch your vibes. Does that song make you want to punch something? All right, so here's the chart. So it says, yeah, so you choose your strike and then the net effect of the long position, both stocks underlying. Yeah. So there's the profit and loss on it. So you limit your downside loss with the put. Yep. But you have infinite in your long call. So I guess if you are going to sold the put, you're going to collect. That's going to be good. Buy. So what kind of spread this is. See, this is why I don't know the names. You guys can't see this. Hold on, let me scroll up a little bit. A synthetic call, also referred to as a synthetic call, begins with the investor holding shares. And then down here it says, a synthetic call, also known as a married put or a protective put. So I can't keep track of all the freaking names of these things. It's ridiculous. There's a new name every freaking week. I don't know. Oh, yeah, it does depend on how many times you watch it. All right, guys, we're at 2 hours and 20 minutes. I got to catch some good vibes. Pass out. Do you guys have any last minute questions? So we'll take a little do before we go. Shameless plugs. No, straddles, there's no buys in a straddle. Straddles are both sells. Shameless plugs, guys. Hop in the Discord. Tomorrow's the first of the month. You get the most value for your time, right? Don't sign up tonight. Do not sign up for my Discord tonight. Don't do it because you'll get charged twice. But jump in for a month. I dare you. I challenge you to join my Discord for a month and then tell me at the end of the month that it wasn't worth the money that you paid, that you didn't make it back in premium or at least value. I dare you. And anybody that's in my Discord will tell you. Check out Average Money Podcast. The Average Money Podcast. Wednesday nights we stream live. Great episode coming out tomorrow. Our longest episode. I think it's 1 hour and 18 minutes. That's going to be coming out tomorrow. Please leave voicemails unless you have a voicemail. Unless you're here and you want to ask the question, but I do love voicemails. Please, guys, if you have a question during the week or you hear somebody say something, it's easy. Just try it. But between that, I don't really have anything to sell you except for my Discord, and I'm only selling you my Discord because I know how much value it brings. Jumping for the year, Robin says. You know, I'm not going to tell you that crazy, but I will tell you I'm giving some prizes. Tomorrow there's going to be 5 people in my Discord getting a prize. They're getting free months, and then I think this month I'm going to do something good for Thanksgiving in the Discord. I think I'm going to give away like $500 or $1,000 or something, the Amazon Discord or something like that. But Alex Harmozy says, build the community. That's all that matters. All the cool kids are doing it. I think we have 340 members in the Discord. About half of them are years. All right, guys. Thank you so much for your time. I'm glad I decided to go live tonight and share this time with you. I hope you guys understand that I get as much value and joy out of this. You guys, I'm alone on an island here, literally, and you guys make it really, really nice. Robert, depending on your tier, I think it's $20. $20. So, You sell one call or one put. You follow one call or one put, or you buy one leaps, you'll make that $20 back. I'm not guaranteeing you're going to make the money back, but there's a pretty good chance that I could find you a way to make $20 a month. Thank you, guys. I appreciate all the compliments. It's very, very humbling. If there's anybody out there that has 7,000 friends, tell them to subscribe to my channel, please.